All right, everybody, welcome back to Alternative Finance. My name is Alex, and today we are talking about dividends. I promised you it was coming, and here it is as we cruise along our Investing 101 series. So if you are enjoying this series, you are learning a little something, please, it would mean so much to me if you would subscribe to the channel, give the video a like, send it to your friends so we can get this out there to as many people as possible. So I appreciate you all for checking in and being a part of this. And without further ado, let's keep it rolling. So what is a dividend? I'm sure you will all be shocked when we start with a definition. So what is it? A dividend is a portion of a company's profits that it chooses to distribute to its shareholders. Think of it as a reward for investing in the company. Dividends are usually paid in cash, but they can also come in the form of additional shares of stock. Now, that second part is not very common. I put it on there because it can happen, but usually they're paid in cash. So literally, you're getting a check cut to you by the company you're invested in to do whatever you want to do with it. So Alex, what kinds of companies usually issue dividends? That would be companies that are usually well established, financially stable, and have consistent profits. So that means like blue chip companies, utility companies, real estate investment trusts, so REITs, financial companies like banks tend to pay dividends kind of frequently, defensive industries like healthcare, consumer staples, a lot of those types of companies that you see on here, it's pretty common for them to pay some sort of dividend. Some industries are better known for it than others, and some companies are definitely really well known for it, but again, you can kind of see certain pockets where there do tend to be more common dividend payers. One area that you do not see it very commonly is in these high-flying technology stocks, particularly ones that are younger on in their lifespan and are really focused on growth and pouring all that money into the development of the company. So tech stocks, usually not. Some do, but usually not. And again, there are a lot of usual suspects, if you will, that typically pay dividends. So with this dividend, how often do I get paid? Most publicly traded companies that offer dividends pay those dividends on a quarterly basis, so every 3 months, and for most publicly traded stocks, that's pretty standard. Now, is my payment guaranteed? No, definitely not. Dividends are completely optional and can be halted without notice. Usually they don't try to do that. They like to keep their investors in the know when things are going to happen or not happen. But technically, if things really came out of the blue and caused that company to not be able to pay out their dividend, it could be halted on a moment's notice. With that said, as I mentioned before, there are some usual suspects that have long-standing histories of not only reliably delivering on their dividends, but in some cases even consistently raising that dividend and paying their shareholders more per share than they did in the past. So you can definitely find those types of companies that hang their hat on that if you know where to look and you look hard enough. But even with those companies, if the circumstances merited it, they technically could cease that dividend without any kind of announcement or notice ahead of time. So how can I tell if a company pays dividend? That's great, Alex. I know how it kind of works, but how do I know if I'm going to get a dividend when I look at a company on the internet? So I have here, as I took a little snippet from Yahoo Finance. What I did was I went to Yahoo Finance's website. I typed the name of the company I wanted to find into the search bar, and this is what popped up. Now, I have blacked out the name of that company because we're not here to promote certain companies. We're here to take a look at how dividends work. But here you can see what you would typically see when you first go on to like something like Yahoo Finance. And if you look at this page right here, I've gone ahead and highlighted down in the bottom right corner where you would look to see if the company pays a dividend. So you can see right there it says forward dividend and yield. And this particular company pays $4.18 for every share that you own of the company, which equates to 3.43%, give or take, per share. So every dollar you invest in this stock, you will presumably receive 3.43% if you invested that today. Now, when you're looking at dividends, especially if you're relying on these dividends for income to live off of in your daily lives, I would encourage you to focus more so on the dollar amount, right? And the reason for that is because the dollar amount, the $4.18 you see right there, when I say that they raise their dividend and maintain their dividend, that is what I am talking about. The percentage is merely a calculation of what that dollar amount is divided by the share price. And it gives you an accurate reading of how much interest, because it's not interest, it's a dividend, but how much income I will receive percentage-wise if I invested today. But that is going to change on a pretty much daily basis, because as the stock price changes, the percentage that dollar value is of the stock price will also change. And if you're living off income, right, it's definitely more important to focus on the dollar. So what is this dude talking about? Let's look at an example. So here we are with ABC Company, a stock price of $121.80, the annual dividend payment of $4.18, which means on a quarterly basis, which is how we said most stocks pay their dividends out, you can expect to receive $1.04.5, take that for what you want, per share that you own every quarter for a total of $4.18. That comes out to, when I divide the $4.18 divided by the price of $121.80, that comes out to a dividend yield of 3.43%. Now, what happens when the stock falls to 90? Well, in this circumstance, the stock price is now 90. They're still paying me that $4.18 per share. I'm still getting my $1.04.5 per quarter. If I take that yield, that $4.18 per year that I'm getting, and divide it by the new share price of 90, if I were to buy that share today, the yield I would get would be 4.64%. So what does that mean for me, right? Break that down into, talk to me like I'm 5. What do I care about here? What that means right here is try to identify companies that are committed to not only paying their dividend, but to raising it. And again, I'm talking about that dollar figure. From there, stay informed on your holdings, and that can help you try to identify potential threats to your dividend payment, right? And when you're looking at the dollar figure, as long as they continue to pay you that amount, if you are in the situation where you are living on a fixed income and these investments are paying your salary to live off of, that $4.18 per share per year is what matters to you. If the price goes down to $90, as long as you can continue to receive that $4.18, it's okay that the price comes down to whatever, as long as you continue to receive the money you need to live. Secondly, down stock, up dividend. So when there are sharp drops in the stock price of a dividend paying stock, that could create an opportunity to invest in high income producing assets. So this of course assumes that the source of the stock drop does not consequently jeopardize the ability to make that payment in the first place, right? So hopefully the stock's going down. That doesn't mean that the company is doomed and they can't pay their dividend. Assuming that that is not the case and they can still pay that dividend, since the stock price has come way, way down, as you saw in our previous example, the yield for investing in it today is going to be very, very attractive in all likelihood. So as stocks go down that pay dividends, those dividend yields tend to go up because, again, it's the dividend yield, which is not changing, divided by the stock price, which is going down, makes a bigger number. And that means new money that you come in with will earn a higher percentage. So it could be a good time to buy dividend paying stocks when they are down. So talk to me about taxes, Alex. There's always taxes. What do taxes look like for dividends? So first things first, you need to identify whether your dividends are qualified or non-qualified. Usually when you're talking about a US-based company that's paying dividends on a publicly traded stock market, it's going to be qualified. Okay? Most circumstances, unless you're investing in something wonky, it's going to be qualified, right? But there are some exceptions to what I just said. So assuming none of those exceptions are what we're talking about here, how is a qualified dividend taxed? They're typically taxed at a lower tax rate than interest. Interest comes in at your income tax rate. So whatever your income tax bracket is, that's the same rate you're going to pay on your interest that you earn. With dividends, assuming they are qualified, they are actually taxed as capital gains, which means that you could be, depending on your income, in as high as 20%, which is the cap, but more likely 15% and potentially even 0%. It could be tax-free if your income is low enough to put you in that bracket. But either way, if they're qualified dividends, you're paying typically capital gains tax rate with some exceptions. Now, what are those? Here are the exceptions. Basically, if you have not held the investment long enough, so there is a period where you need to hold it long enough to be able to get these tax benefits. If you try to get the benefit and then sell the stock immediately, they will take away some of those tax benefits from you. Additionally, if it's a non-U.S. company, so if it's a company that's not domiciled in the U.S., that dividend is likely going to be non-qualified. REITs, money market funds, these are other examples of areas where they would not be qualified dividends. Those would be taxed at your income tax brackets. But again, qualified dividends, beneficial tax treatment, as long as parameters are met. And if you are looking to invest in dividends, please absolutely consult a financial professional so they can help you do it properly. As always, if you like this type of content, please like the video, send it to your friends, leave us a comment, let us know what we can do better, let us know what you think, and definitely subscribe to the channel so you can follow us along this journey. We're cruising along Investing 101. We got a long way to go. Hopefully you'll be here with us, but until next time, you guys, that's Finance AF.